So winning trades, how do we perfect it? How do we make it possible so that we can become profitable? How do we get in certain trade setups that allow us to make money each and every day in the market? You know what I've said time and time again. I have a firm belief that you should be what? Green each and every day. Now you may have a day, especially if you are a beginner trader, to where you break even. And you may experience multiple days like that until you further your career or your journey into this whole day trading world, all right? And to perfect, a strategy that actually works for you. Now, I'm not saying it's going to be 100% of the time that you're going to be perfect, spot on, and that you're going to profit every single time. The key to it is knowing when to get out of a position quick enough, right? So that you can get into the next trade setup, make the difference of make up what you lost, say for instance, if you did, or if you broke even, and turn that next trade into a profitable trade. Today, I want to show you a simple technique or method. I don't really want to call it a strategy, that it will assure almost in every instance, okay? I'm not going to say 100% of the time, but I will say this, that going back and back testing and even forward testing, I've determined that it works in most instances, okay? What am I talking about? I am talking to you about liquidity for one, all right? We as traders have to do what? We need to follow and be on the path, all right? Follow the footprints of the big institutions or the banks, if you want to call them that, because they are the driving force within the market. You know, I always talk about buy stops and sell stops, and you really need to do your homework and become educated. I've covered a few videos talking about this particular topic, but liquidity is everything, okay? It is the end all in the trading world, all right? When we talk about the institutions and banks, because they are engineering it and going after it, you know, all day long. No matter what time of the day, no matter what day it is, as long as it's not a holiday, okay, where the banks are closed. But what I'm trying to get you to see is that that's where the money rests. That's where the pot of gold is, and we should be going after it just like the institutions. So I'm going to show you a simple technique or method that you can use in your own trading, okay? When you identify the market has maybe broken through or taken out a buy stop area or a sell stop area. That's basically the market is running liquidity, okay? And the only entities that are really making that happen are the institutions, the big banks. So let's take a look at a few examples. I'm going to show you a setup that actually happened today, okay? And I don't really want to call it a setup. I just kind of call it a technique or method. But when you see this unfold, okay, execute. Okay? Be smart about what you see going on. And you must be logical in every step of the way when you're trading to understand the grand scheme, the overall big picture that's being painted. So when I look at the market here, I see the market has ran to the upside, right? So when the market is moving to the upside, what is it doing? It's making higher highs and what? Higher lows. Now you may be asking me, like, say for instance, what do you mean by liquidity? What do you mean by buy stops? What do you mean by sell stops? Just think about it and look on your chart. It's so elementary, you know. A small child can almost pick up and look at a chart and identify areas where there are equal highs or equal lows, okay? So I've talked about this before, about the market moving to the upside, pulling back, you know, and then it tries to regain composure by trying to push higher. All right, where it may make some equal highs at or some equal lows at. So if you haven't watched those videos, go back and watch some of those videos. But I want to show you today how you can capitalize, maximize, profit, all right, on this particular technique or method, okay? So when we see the market moving to the upside, okay, making swings to the upside, it pushes up here, all right, it makes a high, pulls back, tries to push higher, and then it pulls back again, and then it takes off to the upside, right? Creating a new high. Well, when you see this type of activity going on, that means traders are doing what? They're pushing and driving the market higher, all right? When it pulls back like this and then breaks and makes a new high, so basically we're breaking structure to the upside, correct? There's an area of sell stops right here, okay? And what happens is, so we have this low here and we have this high here. Price runs and takes out this high here, okay? Keep that in mind. Now, because we have a new high that has been formed, still with the continuation of this move to the upside, we have sell stops resting right here, okay? Because those traders right here, which were going along on this pullback right here, it was a test to try to stop traders out as the market pulled back. So some selling activity took place here, and then the market turns back around to push higher and take out the high here. So we have sell stops here. So equate sell stops with liquidity, okay? All right, so the market continued running higher. So I'm keeping this area of reference in my mind, okay? Because I must know that if price breaks below this area here, I could possibly look for an entry going short. If we break it through it in a pullback, as long as we have what? An area of aggressive activity to the downside, which would set us up for a nice supply setup, okay? But one thing for sure I also want you to pay attention to is we made these highs up here at the top, right? We pull back. Again, some more selling activity took place at this area here. Why? Because those individuals that were going long here, okay, as each time the market maybe pulled back, those individuals that were trading up to this point here, they were continuously moving their stops up, okay? All right? So maybe let's say you're still in the trade at this point after the market pulls back here, it takes a run to the upside here, you're going to be moving your stops up. So the market is always trying to do, pull back, and when it does or retrace, it's trying to stop traders out in a sense, okay? Because selling activity took place here. It could be the institution stepping in to drive traders out of the market, okay? And at that point there, it's a matter of what happens next in an instance, okay? But for sure, some selling activity took place here. Maybe you're still long. You move your stop up here, okay? Maybe you got stopped out, or maybe you're still in the trade. Maybe your stop is still resting right here. Either way, as the market moves higher, okay, and it's creating areas of equal lows, okay, or similar lows, it could be slightly have broken below this area right here. Still, when the market makes a new high, makes a new mark to the upside, breaks this area or this high right here, there are sell stops right here. Equated to what? Liquidity. At some point, the market's going to come down there and capitalize on that area right there and take it out. Who's going to be the driving force to make that happen? The banks and the institutions. But I want to show you how you can actually take a play off of activity like that happening when the market starts to break lower and starts to take out areas of either sell stops or buy stops, okay? I'm going to show you a method or technique to actually use to where you can capitalize and take a trade going short in this instance here, all right? Or it could be long if we're breaking through areas of buy stops, all right? So always keep those areas in mind, those double bottoms, those double tops, or equal highs or equal lows, okay? So the market made a high here, right? And then it starts to pull back, okay? And then it starts to do what? It starts to make equal highs here or double highs right here, right? Okay? Before it starts to do what? Pull back again, making equal lows. So we have an area of buy stops here, sell stops here, and then what happens? The market pushes higher, running this area here of buy stops, okay? Trying to force those that went short right here out of the market, okay? So it grabbed liquidity at this area here. When price grabs an area of liquidity or hits an area of buy stops or sell stops, then it wants to turn direction and probably take the opposite route, okay, to collect or break through an area of liquidity. In this case here, if it grabbed it here, the top end, taking out this area of buy stops right here, collecting liquidity, is probably going to want to do what? Turn, fold at some point, push lower, and start taking out areas of liquidity below. So as it's running areas of liquidity to the upside, it's going to turn around at some point and take areas of liquidity out at the bottom side. If it's running area of liquidities at the bottom side, at some point it's going to turn back around and start running areas of liquidity at the top side. Just as I mentioned today over on the Discord community, I sent out a message. I said, hey, it looks like the market is doing what? It's come down here. It hit this low point right here. It didn't run this area here, okay, this low right here. So what it did was rejected it, turned back around, and now it's trying to take areas of buy stops out back to the upside here, okay? Because those that were selling right here, you have buy stops resting above these highs on the way back up to the upside, okay, especially at areas of equal highs or equal lows. This case here, equal highs back to the upside or double tops. What's going to happen? The institutions or banks are interested in those areas because that's where money rests at, okay? And that's what they're going after just every single day on the charts within the market. They're going after those areas of what most people will call liquidity pools. Now pay attention to what happened here, okay? I just want to show you this right quick, okay? Because this was a demand setup, all right? Price pushed higher, create this area of sell stops here before it took off, to the upside, right? So once price broke this high right here, okay, we have sell stops here. We have liquidity resting right here. But keep in mind, there was liquidity resting right here as well as buy stops right here. Price pushes to the upside, boom. Look at this, aggressive buying to the upside. What does it do? It comes right back to this area right here, okay, this zone right here where there is an area of demand at. Let's draw it off right here, demand right here. So that's an opportunity for you to do what? To go long. Where? Back up to this area, maybe possibly right up here, towards back to the highs up here. There were imbalances on the move to the downside where price would trace back to this demand zone after taking out liquidity above here in this area, all right? But what I want to show you is, so we have sell stops here, liquidity resting right here. We have sell stops here, liquidity resting right here. We have buy stops resting right here, okay? Equal highs, equal lows. Keep that in mind. So price made it high here, pushed lower, okay? And then it does what? It creates these buy stops right here. It creates an area of sell stops. Now it doesn't come back up here and run the high right here, but it does go up there and break through and take out this area of buy stops right here, okay? So keep that in mind. We took out this area of buy stops here. We grabbed liquidity, all right? This is a setup, a play on what the institutions like to do, okay? So they ran liquidity to the upside right here. They didn't take the high out, okay? But they grabbed that area of liquidity right here, and then their sell stops resting below as well. Now, remember what I said, when they try or when they start grabbing areas of liquidity to the upside or running buy stops, you know, naturally speaking, most times they're going to at some point turn around and start grabbing from below, meaning grabbing areas of liquidity from below. So they take out the stops right here, all right, running a little bit more to the upside there, and then look what unfolds. Sell stops here, they start turning the market to the downside, all right, start pushing and putting on tons of orders to push the market quick to the downside here, all right? Now, here is the setup or technique I want to, not say setup, but a method or technique that you can use when you see something like this happen. When the market drives lower and breaks below the area of sell stops right here, okay, let's take a look here, right below this area right here, okay? Now, it did break and close below. Typically, what you'll see most times is the market will push lower and wick out right below the area where their sell stops at, right? And then it'll pull back, and then there'll be a continuation move to the downside. And that's what we want to capitalize on, is that looking for that opportunity to take the continuation or a trade going lower. We have sell stops resting right below this area here. So think about it logically. When price takes out this area of sell stops right here, okay, pulls back, we're going to be aiming for possibly the next area of buy stops below. Reason being because we do have an area of, not buy stops, guys, sorry, sell stops below. We have an area of sell stops here. So I would be interested when I see price kind of poke below this area of sell stops right here and do this right here. Wait, blow it up so you can see it, guys. All right, I'm talking about. Blow it up. It breaks below, slightly below the area of sell stops right here. Ran liquidity. It pulls back, okay? It's a little rotation right here, okay? This is an area of consolidation, and this is what you really want to look for when you want to take or capitalize on that opportunity to continue the short position, okay, in which the institutions are still trying to play off of. So it breaks below, slightly below this area here of sell stops. It pulls back, pushes lower, creates a little swing activity here, pulls back. You see this candle right here? That candle right there? That is the institution setting up a play to continue going short. Again, I will say that again. That is an area, that is the candle where the institutions, okay, are faking traders out, looking like it may be an opportunity to do what? To take a long position. They turn the market back around and do what? Start piling on the orders to do what? To go short, okay? So the moment that price breaks below this candle here, okay, this bullish candle right here to the downside, you can look for some type of retracement back Typically speaking, you have to see it when as the market is live and moving in this area. So we are transacting at this area right here. Okay, we see this setup taking place. Bullish candle to the upside. You got to understand that is the institutions, the big banks, they are creating a power play to take place here to continue driving the market short. Okay, so they pull it back. Fake traders out. Boom, they break lower. And then when you see some type of quick little pullback here, so just keep in mind in reference that if we were in this area live right now, the market broke below this bullish candle right here with this red candle, and then you saw it pull back within this, while the candle was still live right here, while this candle was still active, you see it pull back. The moment it pulls back to this area, take your shot going short, okay? All right, you may be asking, well, for how long or where to? Well, all this below us are going to be areas where the market is going to, at some point, be trying to take traders out because people went long here and still had their positions on, okay? So as the market is running lower, it's stopping traders out, okay? There's sell stops there, you know, to where the market is trying to run areas of not just liquidity, but stopping traders out as a whole, okay? So look, once that candle there closed, let's say it closed at 77.75 or 44.77 and 3/4 or 44.78, right? And you got in the trade 78. Look at all that it gave you right there, okay? Look at all that it gave you. It gave you basically 10, 11 points right there, okay? Nice run. But what I also saw below this area, once I took these sell stops here out and set up this little power play like I told you right here, I saw this area of sell stops here. I said if they run in this area of sell stops, there's liquidity there. The next opportunity is probably going to be right here. They're going to want to probably run this area here because there's sell stops there too. Traders that were going long right here, they reposition their stops right here. The institutions know that, and they're going to try to take you out right there just as well. Okay? So when I see a setup like this, and I see this big bullish candle right here, and then I see, my mind immediately starts thinking fake out. Okay? Then I see it close below, I'm going short. I'm going short at least to the area. If I get in at 78, possibly down here at 74, pick up 4 points. And if I have multiple contracts on, I would take most of my position out right here and let a run, because they're going to at some point continue wanting to do what? Move to the downside and stop all these traders out that were going long right here. They did it, but it just takes, they have a strategic way about doing it. They ran 10 points, 11 points here. They pull back, and then they did what? Continue flushing to the downside and taking out traders that were going long right here. You have to see those type setups taking place here. So look for areas within the market to where price, where there's double top set, double bottom set, equal highs, equal lows, okay? All right, in this case here, these are going to be formulations of sell stops, okay? Look for price to slightly run it by a few ticks, okay? And then look for some consolidation setup, like right here. Look for a little area consolidation. It ran it by a few ticks, pull back, push down, boom. This candle right here, that big green bullish candle right here, that was the power play right there that they were trying to set up the fake traders out to push the market lower. You have to see things like that. I'm going to show you another example. Okay, so overnight, what happens? The market keeps driving lower. Now look at this area right here where I have this area circle, if you want to call it an ellipse. There are sell stops resting right here. What do we have here? We have a double bottom right here, or equal lows right here, okay? The market drives down, okay? Look what it does. I'm going to go ahead and take out an arrow line or an arrow line right here, okay? And just look, okay? We'll draw it right, we'll put it right here, okay? So we got a push down, pull back, price breaking lower. See that candle right there, that green candle that wicked out right below the arrow line that I drew right here? Look what it did. It ran those bottoms right there. It took out those sell stops. It grabbed an area of liquidity, okay? Now, when I see something like that, I look for a pullback to see if the market, again, is going to consolidate in some way. It pushed down, wicked the area out, pulls back, pushes lower, okay? It pushed lower there, pulled back, okay? So it's consolidating in this little area right here. This green candle right here, okay, right here, all right? When I saw that right there, you know, if I'm looking at it, I said this could be another opportunity to take a continuation going short, right? Okay, price broke below an area of liquidity there where the sell stop's at, breaks lower, consolidating, pulls back, bullish candle right there. This is what they're trying to do to fake you out, okay? Now, it didn't take out this high, this little, where it pushed down right here, pulled back and broke lower. It didn't run that little high right there at 44.40, okay? It rejected that area, bullish candle here, closing the opposite direction with a a bearish candle to the downside. Right there to close at 35, take your opportunity to go short, clear the lows here at 32.5, okay? And then continue to take the trade down to an area where there's possibly areas of additional sell stop areas at, okay? Now, we were within this swing right here to the upside, okay? Right here, once price broke below this blue line right here, okay? So there are areas of, areas right here that price could take out back down to the low of this swing right here, okay? And look what it did today. It tested that low of this swing here, okay? So when you see something like that, you can take opportunities, especially when you get the break below an area where the sell stop's resting at, okay? And then you see consolidation, and then you see in this instance here, or an example, a bullish candle, which signifies that the institutions are just trying to set up a fake out, all right? And then when you see price take out that candle in which they pull the market back with a big green candle, a big bullish candle, and then they close below it, they're packing on orders to do what? Continue driving the market to the downside, all right? So that's what you have to pay attention to, is every area within the market. The overall gameplay for the institutions or the banks is to do what? Is to create areas of liquidity, fake retail traders out, stop them out, and grab liquidity, okay? All right, and they have a strategic way about doing that. Now, we as traders, like myself, I'm a scalper, so I'm looking for opportunities like that. The moment price takes out an area of sell stops where it's, ran to the upside right here, okay? Ran to the upside, and then we have sell stops here. This was an old low, and then it breaks below, well, let's say this area right here, okay? Because basically what happened once it broke this area right here, it ran straight to the downside. Now, it could have pulled back right here, and you could have had a supply setup, but it broke above that. But, again, there was a demand setup right here when price broke higher right here. But what it did right here, like I showed you earlier, it snaked right below it, a few ticks, okay? And when you see something like that, start to think, like I said, what's going on. Just be patient about what you see in what's taking place in the market, okay? There are plenty of opportunities to trade supply and demand, all right? And to scalp those areas of supply and demand at the same time, all right? But when I see something like this take place here where the market's running to the upside, it's creating pullbacks, it breaks a high here, meaning breaking structure, taking out a high right here, and now we've got these lows resting right here. So now these areas or these lows right here or sell stops are now old lows. I'm looking for, at some point, price is going to try to take it out. Now it may take it out with aggressive forwards. It may wick right through it, and then I can look for a nice power play to continue with the institutions to the downside, just as they did right here. They set up this area of liquidity, push the market higher to run these stops right here, these buy stops, turn the market back down. They said, okay, we're going to trick them right here. We're going to run the market here, collect liquidity here by a few ticks here, all right? And then they set up, there was some consolidation here, and they continue driving the market lower, all right? Now, we don't know where they're going to actually stop at, okay? But if you see other areas of sell stops below that are right underneath where they have created a setup, a power play, just like right here, then try to aim for that next area of liquidity or those sell stops right below, okay? So just think logically. Look at what's taking place. So when the market ran lower right here, look to the left-hand side of the chart. That swing I just talked about, it didn't take out that low right there. What did it do? It rejected that zone right there at 44.20, rejected it, okay? So you see you have a little swing to the downside, pull back, boom, price breaks lower, and then there's a market shift back to the upside. When I saw that market shift back to the upside, my mind started kind of saying, okay, this is probably a short term. It could be, I'm looking at a 12 range chart, okay, to where the market could be trying to do a quick reversal. Say, for instance, it could be short lived. But either way, when I see a market shift like that within the market where it did not break through a low, I say, okay, they're shifting back to the upside to do what? To start aiming for buy stops, areas of liquidity back up to the top side here. Now, you may be asking, is the market finished running to the downside? I'm not sure, but look at my higher time frame, the 60 range. We still are in a bullish mode to the upside here. If you look at things, Okay, why? Because we had a high here, pullback, decent pullback, lots of selling off, and then price comes up here and makes a new high. So this could be a pullback just to come back up here to take out this area of liquidity, or to the top side here and run these highs up here. Okay, so not sure, but right now to me we're still bullish. Just looking at the higher time frame. From a lower time frame, yes, it looks like we're bearish, but from the higher time frame, for me, it looks like we're definitely bullish back to the bullish to the upside still. Until we start breaking below and taking out basically this low right here. I mean, we have a low sitting here at 69. It takes that out, yeah, then my mind's going to change. Okay, right here, my bias will change to the downside right here at 69 if it takes it out. But we got a pullback right now, so this could be a continuation just to push higher. It comes down here. We have this area of demand resting right here, pretty much, where price pushed up, pulled back, broke higher. It's pulling back to this area right here, so this could be a push back to the upside. Not 100% sure. You just have to trade what you see overall. Okay, so. But we'll see. You don't know. I'm not sure if price is going to continue pushing to the upside here and start taking out some of these other areas where there's liquidity resting at these buy stops to the top side here. It could do that. Just do that. So we'll just have to focus on and see what's unfolding within the market. It could just as well reject where it's at now here or here, and then turn back around and start pushing lower. Just trade what you see, but you have to wait on the rejection. Okay, you really have to wait on the rejection. But as of right now, what I see on my lower time frame, my 12 range chart, yeah, price rejected this low right here. Okay, rejected it, market shift to the upside, and I capitalized by taking a trade or two to the upside here, allowing the market to run back up and take out some buy stop areas. Okay, simple as that. But anyways, guys, I appreciate you tuning in to watching today's video. As always, if you do not mind and it's your first time viewing the channel and you found the content valuable, please take the time to go ahead and sub to the channel by clicking on the red subscribe button. As well, make sure to click on the bell next to it to turn your post notifications on, or turn all your post notifications on so you never miss one of the uploads here in the channel. As well as we have a great Discord community. If you're interested, people always ask me how they can join. You can join by finding the link down in the description portion of the video, especially this video here. Click on it, invite yourself in. And there are tons of people that always ask me how they can join the elite membership, okay? Look, all you have to do is find the join button. If you see it here on this video here, if you look up top there, somewhere near the subscribe button, you'll see a button that says join. Or you can come over and go over to the home page of this YouTube channel. Click on the join button. You'll see two tiers pop up. The elite membership is the one where you receive all the perks, the badges, the emojis, the priority to reply comments, and you also receive the trade breakdowns when I post those type videos, to where I go into detail about trade setups and walk you through my trades so you understand and grasp an understanding of why I took certain trades. Okay, so it's basically as if you're sitting next to me and I was walking you through just kind of through my mindset, what I saw leading up to the trade, okay? As well as you get the video playlist. It's just a hand-selected list of videos that I feel provide pertinent information, the ones that kind of cover the basis of how I actually trade. Good, from live trading videos to information-based videos that have lots of content that discusses the strategy in which I use. So if you're interested in becoming an elite member, $6.99 a month. Wow, you may be asking, that's very inexpensive. Yes, it is, guys. But you receive so much in doing so by joining and becoming an elite member. But most of all, you're supporting me as a content creator by providing all this relevant information that should help you out in your own trading to give you a better understanding of what to really look for within the markets for $6.99 a month. Most everyone who drinks, just say a coffee, maybe an energy drink, spend more than $6.99 a day, okay? For that beverage, okay, whatever that beverage of choice is that you have a taste for. But we're talking about it from a monthly standpoint, $6.99. So, interested in becoming an elite member? Click on the join button. That's all you have to do, and select the elite member tier and sign up, subscribe. Okay, you can. I appreciate everyone who's currently, are elite members who have already signed up. There are tons of you guys out there who have signed up. I appreciate that. I really thank you for supporting the channel. And I'll continue trying to make content like this and helping everyone out there because I want to see everyone succeed. But outside of that, I wish everyone a safe trading day. Have a successful day. I'll see you guys in the next upcoming video. I've already posted a few entries over in the Discord. Yes, I do post my entries in Discord. Maybe not every single one, but when I'm trading on a daily, I will, screenshot and post at least 2, maybe 3 entries a day. Okay, so if you're interested again to see those type entries, not just my trades, but other traders that take trades as well, join our Discord. It's down. The link is down in the description portion of the video. Thank you guys. I'll see you in the next one. Take care.